All right, here's a good one. What happens when everybody decides to mimic the hottest money manager in the world? Well, things get a little weird. That's what happens. Right now, nobody in the industry has a hotter hand than Cathie Wood and her team at ARK Invest. It's an asset manager with a family of funds, including 7 exchange-traded funds that have suddenly become wildly popular. ARK Invest is unique, not just because of their incredible performance, but because they're focused like a laser on disruptive innovation. You know our disruptive list that we do at CNBC? These guys are the uber disruptor investors. If it's not disrupting, they're not interested. And that's why, by the way, we never profile managers, ever, right? Have we ever done that? But this time, we have to. Disruptors make money. Cathie Wood started this business in 2014. And the last few years, she's had one gigantic win after another. She's best known for making big bets on Tesla, on Bitcoin, back when those were extremely contrarian calls. It's hard to remember now, but 2 years ago it was tough to be bullish on Tesla. There were times when you couldn't find anyone other than Wood and Ron Barron who liked it. But she and her people came on CNBC time after time to make the case that Tesla had way more upside than anyone gave them credit for. She and her team were mocked mercilessly because their long-term price targets seemed insanely upbeat. Back before the stock's 5-for-1 split, Wood loved to say that Tesla was going to $4,000. Post-split, that's $800. Oh, Wall Street scoffed. They said she doesn't know what she's doing. It's, just it's hype. Well, guess what? Today, Tesla closed at $846. So who's crazy now? That's a spectacular call. And it's not just a couple of big bets. Cathie Wood has a stunning overall track record. Her flagship actively managed ETF, ARK Innovation, soared nearly 150% last year, fueled by powerful disruptors. Roku, Teladoc, how much do we like that? Zillow, and of course Tesla. These are all great companies, all huge gainers. Her second largest ETF, ARK Genomic Revolution. Think revolutionary medicine, genetically engineered crops. Did even better. It's up 178%. Her third biggest fund, ARK Next Generation Internet, jumped 154%. These are staggering numbers. I could go on and on. Their fintech ETFs up 127.5. Since the end of 2019, their automation and robotics ETFs up 144%. These are staggering. ARK Invest is practically printing money, and so are those acolytes who follow her. I think the only one that she doesn't own is GameStop. So it makes sense that ARK's funds have seen some huge inflows, and everybody's watching Cathie Wood like a hawk. ARK's daily emails, where they disclose their ETF trades, have become a required bulletin on Wall Street. I get it's like 401. It's like, wow, what did she do today? After the close, I check the S&P short-range oscillator like I've done for decades, and then I take a peek at what Cathie's buying. Can't resist. It's like looking at the NFL draft before it occurs. But it's now gotten to be the point where some people are saying, wait a second. The Cathie Wood phenomenon is having a real impact on the broader market. That's what I meant when I said things start to get weird when everyone tries to imitate the woman with the Midas touch. There are two distinct stories here. First, there's the money coming in over the transom issue. A little over a year ago, ARK Invest had $3 billion in assets under management spread across more than a half dozen funds. By late October, they had $17 billion. A month later, $24 billion. Then $34.6 billion at the end of December, and roughly $47 billion today. Now, some of that's simply because ARK owns stocks that are performing incredibly. When the stock prices go up, they have more money under management. But most of it has to do with new money coming in. Last month, ARK had more than $8 billion in inflows across its 7 funds. So far in January, they've got $6.7 billion, with the bulk of that split between the flagship ARK Innovation ETF and ARK Genomic Revolution. You can see that money coming in. She puts more money to work every day in the same names. There's a lot of capital, but there's lots of stock to buy. In fact, ARK's family of funds is now the #2 destination for money going into ETFs, behind only Vanguard. Wood's actively managed funds are getting more cash than iShares or State Street or Invesco, the powerhouses of passive investing, who must just be looking and saying, we got to own ARK Invest. When an actively managed fund gets billions of dollars, they have to figure out where to put it. So far, ARK simply stuck with their game plan. Good. I don't want any sort of trend that goes away from her plan. They continue to buy what they call disruptive innovators, basically a mix of speculative stocks and super fast growers. No drift here. However, just yesterday, Barron's published a piece arguing that ARK's funds may have gotten too big for their own good. When you're managing tens of billions of dollars, it's tougher to amass a meaningful stake in some of these smaller companies, and you end up owning a massive percentage of the share count. I don't even know if she should actually publish what she's doing or maybe give it a delay, because there's just too much front running. Which brings me to the second story. So many smaller players are following Cathie Wood's every move that I think it's warping the action. When ARK Invest buys something new, tons of younger investors on Robinhood follow them into it, creating a self-fulfilling rally. Rather than just putting their money in the ETF, they want to buy what Wood's buying, and they want it now. The Merrymen, as I call them, Robinhood and his Merrymen, is having a ball imitating Cathie Wood. So let's talk one that I like very, very much, and give you an example. I'm going to walk you through the Zoom video. Yes, here's a stock that's been on a 3-month losing streak because traders wanted to ring the register on the ultimate pandemic play before everyone gets vaccinated. Makes sense. Last Tuesday, Zoom plunged to $331 after the company announced a $1.5 billion secondary offering. But then the stock found its footing in the middle of the session, actually finished up 5%. What's going on here? I couldn't find a reason until that night, when we learned that ARK had made a massive buy. And since then, it's come roaring back, rebounding at 383 today, because we all know that Cathie Wood put in the bottom. Nothing wrong with that, especially since I think she's right about Zoom. Even after we beat COVID, we won't just forget everything we've learned about how remote work can boost productivity. And Zoom's not standing still. A lot of new products. I still think it's a winner. And Eric Yuan, you're welcome on the show anytime you want. But it doesn't stop at piggybacking. You got a whole contingent of traders who are trying to front-run ARK, as I mentioned earlier. Last week, we learned that Cathie Wood and her team are launching a new ETF focused on space exploration. In response, all the high-profile space stocks soared higher, presumably in the expectation that ARK's new ETF will be a buyer, and they can toss it to the ETF. Virgin Galactic, the extremely early-stage commercial space tourism play, saw its stock jump 20%. There were similar moves in Maxar Technologies, Viasat, Iridium, Orbcom, all because Cathie Wood's new fund might be interested in them. Maybe, but the darn fund doesn't even exist yet. So these trades feel like a recipe for disaster. All told, these 5 space stocks are up 29% on average year to date. That makes it tough for ARK to get a good entry point once this new ETF launches, because everybody front-ran Cathie Wood. So now Wood and her team are coming under fire for all sorts of these graybeards they're after. You know, the people come on and they say that people are like frogs that boil because they're buying stocks, whatever. People get nervous when they see a fund with such incredible performance. Barron's piece yesterday made some good points about the law of large numbers. Can't manage $47 billion the same way you manage $3 billion. Then a skeptical Wall Street Journal article just last week, which compared ARK to one of the hottest mutual funds of the dot-com era, Janus. After racking up huge wins on stocks like Cisco and AOL, the Teslas of the 90s, the dot-com bubble burst and Janus's funds got obliterated. I don't know if it's the right comparison or not, but it's good to have historical and to have it in your mind. Well, I don't think ARK is the next Janus. That would be too harsh. I also wouldn't count on them to continue to deliver awe-inspiring returns year after year, especially after publishing what they're buying. Don't get me wrong. Cathie Wood is legitimately brilliant. But she and her team have to keep finding new winners. And it'll be a lot harder to find them and to buy those stocks at reasonable prices because there's so many copycats. And by the way, the people, like you look at Wall Street Bets or Robinhood, they keep taking and taking. They're not going to, they'll take it in front of for Palantir. They'll take it in front for GameStop. They're doing an AMC now. They just have a Bed Bath & Beyond. If you wanted to buy those stocks, forget it. They'll move them up too much. The biggest risk, though, I think, is the lack of diversification. These speculative growth stories tend to trade as a group. Right now, the market loves momentum, so they're doing great. But the next time momentum goes out of style, well, it could be look out below. Here's the bottom line. Cathie Wood and her team at ARK Invest have made some incredible calls, and my hat is tipping to them. They absolutely deserve all the praise they're getting. We are going to continue to follow her like a hawk. That said, When I see so many copycats trying to imitate the same manager and take stock ahead of her, it makes me a little nervous. So keep your eyes open. Wait for when we think enough is enough. But remember, it sure isn't yet. Let's go to John in Minnesota. John.
Hey, yo, Kramer, how we doing?
I am doing well, and how are you doing, my friend?
Fantastic. Booyah. So I'm calling you to ask about Riot Blockchain, ticker symbol RIOT. You know, if cryptocurrency keeps heading in this direction, I think they're in for a big year. What are your thoughts?
Well, look, they're an ancillary play on Bitcoin. Now, I've been very public saying that Bitcoin is a repository of wealth, but I think the best way to play Bitcoin is Bitcoin. That's how we do things around here. Now, Kathy Woods got the Midas touch. She and her team have made incredible calls and deserve all the praise. I think I just got her bulletin. I'm going to take a look at what they bought today. She's been liking a Bristol Myers. Okay, much more mad money yet, including my exclusive with First Horizon after earnings. What does the report signal for the rest of the regional players? Then the market of stocks is finally acting like a market of stocks. I'm going to explain why it's a refreshing change. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Kramer.